Spain's unemployment rate has just dropped to 9.87%, the lowest figure recorded in 18 years. Think about that for a moment. You would have to go back to before the global financial crisis to find fewer people out of work in Spain. The data, covering the second quarter of 2026 and released this week, shows a labor market that has quietly transformed itself from the Eurozone's perennial problem child into one of its stronger performers. For years, Spain carried the unwanted title of having one of the highest jobless rates in the European Union. Now, that narrative is being rewritten in real time. But before you assume this is a simple good news story, stick with us, because the same week this record was announced, Spaniards were also revealed to be spending roughly half their salary just to keep a roof over their heads. Two headlines, one country, and a genuine tension worth understanding. So what pushed the rate down this far, this fast? The improvement has been building steadily through 2026, driven largely by strong hiring in tourism, hospitality, and services, sectors that make up a huge share of Spain's economy. Spain welcomed record numbers of international visitors again this year, and that demand translated directly into seasonal and permanent jobs across hotels, restaurants, and transport. Alongside the jobs data, Spain's budget deficit has also fallen to its lowest level in 18 years, a sign that the improvement isn't isolated to employment figures alone but reflects broader fiscal discipline. Government tax receipts have risen as more people entered work and paid into the system, creating a reinforcing cycle. Analysts note this is the first time in nearly 2 decades that both the jobless rate and the deficit have improved this significantly in the same reporting period, which is why economists have been quick to call this a genuinely structural shift rather than a temporary blip. Regionally, Catalonia has become the standout performer. The region posted a record 3.92 million workers in April 2026, alongside the sharpest monthly drop in unemployment seen there in 7 years. Barcelona and the surrounding industrial belt have benefited from renewed investment in manufacturing, logistics, and technology firms expanding their Spanish operations. This regional strength matters because Catalonia has historically been one of Spain's most economically significant areas, contributing close to a fifth of national output. When Catalonia's labor market accelerates like this, it tends to pull national figures along with it. Local officials have pointed to a mix of foreign direct investment and a rebound in construction activity as key drivers, though they're also candid that rapid job growth has intensified pressure on housing in the very same cities where the jobs are being created. Here's a statistic that turns the usual story on its head. Youth unemployment in Britain has now climbed above levels seen in both Spain and Greece, two countries that spent the past decade being held up as Europe's cautionary tales on joblessness. For years, British commentators pointed to Spanish and Greek youth unemployment as a warning of what happens when economies mismanage recovery. Now the comparison runs the other way. Spain's youth jobless rate has been falling steadily as tourism, apprenticeship schemes and vocational training pipelines feed young workers into growing industries. It's a reminder that unemployment trends can shift dramatically within just a few years, and that today's laggard can become tomorrow's relative success story, at least on this one measure. Now for the tension at the heart of this story. Despite record low unemployment, Spaniards are currently spending around half their salary on rent nationally, and that figure rises above 70% in Madrid and Barcelona specifically. In other words, more people are working than at any point in 18 years, yet a huge share of what they earn is being swallowed by housing costs before it ever reaches savings or discretionary spending. This is a familiar pattern seen across major European cities, where job growth concentrates in urban centers and drives up demand for limited housing stock faster than supply can respond. For many young Spanish workers, having a job is no longer the main obstacle. Affording a place to live near that job is the new barrier, and it's one that falling unemployment figures alone cannot fix. It's also worth noting that Spain's improving jobs picture doesn't mean every corner of the economy is thriving equally. Mercedes-Benz recently cut its sales forecast, citing continuing troubles in the Chinese market, a reminder that Spain and Europe remain exposed to global demand shifts well beyond domestic labor policy. Spain hosts significant automotive manufacturing, including major plants that supply German carmakers, so weaker Chinese demand for premium vehicles can still ripple back into Spanish factory output and jobs further down the line. This shows why it's important not to read one strong unemployment print as proof that every industry is firing on all cylinders. Manufacturing and export-facing sectors remain sensitive to conditions well outside Spain's borders, even as domestic services keep the headline employment numbers looking strong. Looking ahead, most economists expect Spain's unemployment rate to hold near current levels through the rest of the summer, supported by continued tourist arrivals and steady services hiring. The bigger question for the second half of 2026 is whether the government can translate this labor market strength into policies that ease the rent burden, through increased housing supply or rental market reforms, before affordability problems start denting consumer confidence. If the budget deficit keeps shrinking alongside falling unemployment, Spain will have more fiscal room to invest in housing and infrastructure without needing to raise taxes. But if global manufacturing headwinds, like the ones affecting Mercedes-Benz, spread further into Spain's industrial base, some of these employment gains could soften going into 2027. So here's the bottom line. Spain's unemployment rate falling to 9.87%, its lowest in 18 years, is a genuinely significant achievement and a clear sign of economic resilience. But it's only half the story. Record employment sitting alongside a housing affordability crisis, where half of people's wages disappear into rent, shows that a strong jobs market doesn't automatically mean a comfortable standard of living. The real test for Spain now isn't creating more jobs, it's making sure the country builds enough homes and support systems so that having work actually translates into a better quality of life. That's the story worth watching as 2026 continues. If you found this breakdown useful, stay subscribed, because we'll be tracking exactly how this plays out.